Hey everybody, today we're going to talk about gold IRAs. You've probably seen ads plastered all over YouTube and cable TV. Famous spokespeople telling you the dollar is crashing, the market is going to implode, and the one thing standing between you and financial ruin is a gold-backed retirement account. So today we're going to cut through all that and actually break down what a gold IRA is, where it came from, who it's built for, and the real pros and cons. And at the end, I'll tell you exactly why, despite being a precious metals guy myself, I personally don't use them. Let's get into it. To understand gold IRAs, you need to know a little bit of history. The standard individual retirement account, the IRA, has been around since 1974 when the Employee Retirement Income Security Act was passed. The idea was simple: let Americans set aside money for retirement on a tax advantaged basis. But here's the thing: the first 2 decades of IRAs, you could only hold paper assets, stocks, bonds, and mutual funds, and that was it. Physical gold and silver, not allowed. That all changed in 1997 with the Taxpayer Relief Act, the same law that also introduced the Roth IRA. Buried in that legislation was a provision that expanded what you could hold inside an IRA. Specifically, it opened the door to physical precious metals, gold, silver, platinum, and palladium, as long as they met certain IRS purity requirements. Initially, it was pretty narrow, just specific US Treasury minted coins. But over the following years, the rules expanded to include a wide range of IRS approved bullion bars and coins from various sovereign mints around the world. And that is how the gold IRA industry was born. What started as a small carve out in a tax bill turned into a multi-billion-dollar industry. So, how does a gold IRA actually work? A gold IRA is a type of self-directed IRA. The self-directed part means you have more control over what goes into it. Beyond the standard stocks and bonds your brokerage would offer, technically it's still a traditional IRA or Roth IRA from a tax standpoint. The difference is just what it holds. Here's the structure. You need 3 players. First, an IRS approved custodian, typically a specialty financial company who manages the account and handles the IRS paperwork. Second, an approved precious metals dealer who sells you the metal. And third, an IRS approved depository, a secure vault facility where the physical metal is actually stored. Typically, most online bullion dealers will take care of all 3. Think APMEX, thing like that. And here's something worth clearing up right now. Despite the name, a gold IRA isn't just for gold. The industry just defaulted to calling that because gold is the most popular choice. The accurate term is a precious metals IRA. It can hold gold, silver, platinum, and palladium, all 4 as long as they hit the IRS purity thresholds. The thresholds are as follows. The silver has to be at least 99.9% pure. That means American Silver Eagle is IRA eligible. The Canadian Silver Leaf is IRA eligible. The Austrian Silver Philharmonic is IRA eligible. And yes, the British Silver Britannia is also IRA eligible, as should most generic rounds. All the coins you've seen so far on this channel and in this video qualify. So if silver's your thing, you're not locked out. You can build a precious metals IRA around silver or mix and match across all 4 metals. The gold IRA label is really just a nickname that stuck. And this is really important. You cannot store gold at home while it's inside an IRA. The IRA requires it to be held by a qualified trustee. The second it comes back to your personal possession, the IRS treats it as a taxable distribution. We'll come back to why that matters in a minute. As for which one you can use, pretty much anyone who qualifies for a standard IRA. You just need to follow the same contribution limits, which is $7,000 per year in 2026, or $8,000 if you're 50 or older. All right, now let's talk about why people actually want these. What's the argument for a gold IRA? The core pitch is inflation protection and diversification. Gold has historically moved differently from stocks and bonds, meaning when equity markets are getting crushed, gold often holds its value or even goes up. That non-correlation makes it as useful as a hedge against inflation in a retirement portfolio. There's also the dollar erosion argument. Central banks can print money, they can't print gold. Over the last century, the US dollar has lost a staggering amount of purchasing power. Gold's supply is essentially fixed in the near term. That's the fundamental appeal. And the tax wrapper makes it more attractive than just buying gold outright. There are two flavors here. The traditional precious metals IRA, your contribution may be tax deductible and your gains grow tax deferred. You pay taxes when you withdraw in retirement. A Roth precious metals IRA, you contribute after tax dollars, but your growth is completely tax free and qualified withdrawals in retirement are tax free too. Here's why the Roth version is particularly interesting for precious metals, specifically when you own physical gold or silver personally. Outside of any account, such as these retirement accounts, the IRS taxes your gains as collectibles. That's a maximum long-term capital gains rate of 28%. That's higher than the standard 15 or 20% most investors pay on stocks. Inside a Roth IRA, that 28% goes away entirely on qualified distributions. If your silver doubles over 20 years, you pay nothing on that, zero. That's a big advantage that people don't often talk about. So the pitch is basically get exposure to a safe haven asset inside a tax advantage retirement account. And if you go Roth, which I would recommend if you're in the right tax bracket for that, you get a sidestep the collectible tax rate entirely. That's the case for the gold IRA. All right, let's get into the pros and cons of using a gold IRA. First of all, inflation hedge for pro. It's got thousands of years as a store of value, and it tends to do well when inflation is high or the dollar is weakening. Portfolio diversification, tax advantages, as we talked about just a second ago about tax rates on gold and how you can shield that in your IRAs. Physical gold can't be hacked like Bitcoin possibly could in the future with crypto computing, or quantum computing rather. It can't go to zero like stock and isn't tied to performance of any single company or government. Some of the cons: no yield. Gold pays no dividends, no interest, no income. It just sits there. The only turn is price appreciation. If you're building a retirement income stream, that's a real limitation. Higher fees. You're paying a custodian fee, storage fee at the depository, and a dealer premium when you buy. These costs stack up over time and can eat meaningfully into returns, especially if your position is small. You don't control the metal. It's locked in a vault. You can't hold it. You can't access it in an emergency without triggering a taxable event, and you're trusting a third party with that custody. Strict IRS rules. Not all gold qualifies. Collector coins, numismatic coins, and anything below the purity threshold are all off limits. Gold purity at minimum is 99.5%, and your favorite rare coin, probably not IRA eligible. And liquidity is slower than stock. Selling physical gold from IRA involves your custodian, your dealer, and the depository. Not an instant like hitting sell on a brokerage account. Now let's talk about why I don't use a gold IRA. My first issue is precious metals are not productive assets. A productive asset like a stock, rental property, stocks, or bonds generate income. It creates something. Gold just sits there. And Warren Buffett has made this point for decades, and I agree with him. I'm not saying gold has no value. It clearly does, but it's a store of value, not an income source. And when I'm building a retirement portfolio, I want assets that are working for me. My second issue is physical control. One of the main reasons I own precious metals is for the tangibility. I can hold it. I know exactly where it is. In a gold IRA, you hand that over, and if you try and take possession of it, the IRS considers that a distribution, potentially with taxes and a penalty if you're under 59.5. And third, I do think precious metals belong in a well-rounded financial plan, but as a small allocation. I target around 5% of my net worth in physical metals, and that's it. It's an insurance, not a retirement strategy on its own. I don't need a special account to own it. And that's my approach. It might not be yours, and that's completely fine. If you want a tax wrapper and you're comfortable with a custodian, and if you're looking for a hedge to add inside your retirement account, and a gold IRA is a legitimate tool, just go in with your eyes open and know all the facts before you do. So there you have it, the full breakdown on gold IRAs, where they came from, how they work, why people use them, and where the landmines are. My personal approach is to own physical metal directly at a modest allocation. No custodian, no storage fees, just tangible assets I control. But that's my philosophy. The gold IRA exists for people who want the tax wrapper and are comfortable with the structure. For the right person, it makes sense. If you found this useful, hit the like and subscribe button. More precious metals content is coming. And if you have a question about gold IRAs or how you're thinking about your own metals allocation, drop it in the comment. I read all the comments and I try to respond to them. Help me grow this channel. Thanks for watching, and I'll see you in the next one. Until then, keep stacking, everybody.